Hello everyone, I am CA Prateek and you are watching the revision lecture of the chapter Income of Other Persons included in Assessee's Total Income, which we fondly call it as Clubbing of Income chapter, okay, for the CA Intermediate examinations. So let us start with section 60 in the clubbing chapter. Section 60 says if there is any transfer of income without the transfer of the asset, then income is clubbed in the hands of the transferor. Okay, wa? So if I transfer my income without transferring my asset, then the income will still be taxable in the hands of the transferor. That is in my own hands. This transfer can be revocable or irrevocable. It does not matter. Now let us come to transfer of asset. முன்னாடி என்ன பார்த்தோம்? Transfer of income. Now we are seeing transfer of asset. Transfer of asset ல வந்து there are two types of transfer. There is revocable transfer and there is irrevocable transfer. Revocable transfer na enna sir? Temporary transfer. Irrevocable transfer na enna sir? Permanent transfer. Okay. So what is example of irrevocable? If I transfer my property to someone and I tell them keep the property, keep the income, keep everything. I don't want anything from this property. Then it is called permanent transfer, which is irrevocable transfer. However, revocable transfer na enna? For example, I am giving my property to someone and I am telling them after 5 years you give that property back. Or I am giving the property to someone and I am telling them give me the income from that property. In such cases it is called revocable transfer. So revocable transfer is the transfer, okay, one second. Revocable transfer is the transfer where the asset or the income from the asset comes back to the transferor because of any condition. Okay, so what are the example of revocable transfer? Let's see. Number one, where in the contract itself there is a provision for retransfer of whole or part of the income or whole or part of the assets back to the transferor. So if I am transferring an asset, okay, and in the contract itself I have written that the asset will come back to me. In such case it is called revocable transfer. Or I have transferred the asset and I have written in the contract itself that the income from that transfer or the asset will come to me. Then also it is called revocable transfer. Next, if there is a transfer which gives the transferor to reassume the power over whole or part of the income or the asset, then also it is called revocable transfer. So if I am giving asset to someone and if I am telling them I have the power to come and take that asset back from you whenever I want, this is also an example of revocable transfer. So revocable transfer na enna sir? Temporary transfer பண்றது or transfer பண்ணியாச்சு and income வந்து transferருக்கு திருப்பி கிடைச்சிரும். Such transfers are called revocable transfer. Whenever there is a revocable transfer, in such case the income from the asset is clubbed in the hands of the transferor. So income யாருக்கு கிடைக்கும்? Transfereeக்கு கிடைக்கும். But income மேல tax யார் pay பண்ணுவாங்க? Transferor pay பண்ணுவாங்க. ஓகேவா? Now there are two cases where even if it is revocable transfer, it will be considered as irrevocable for the purpose of Income Tax Act. What are they? Number one, the transfer is not revocable during the lifetime of the beneficiary or the transferee. For example, I am transferring my asset to my brother and I am telling my brother that till you die you can keep this asset with yourself. After your death this asset will come back to me. This is a revocable transfer, correct? However, in the Income Tax Act, such transfers are called irrevocable transfer because during the lifetime of the beneficiary, they can keep the asset with themselves. Okay. Then one more example, if any transfer is made before 1/4/1961, that is before the Income Tax Act came into force and which is not revocable for a period of 6 years, then also it is irrevocable transfer. Then now let's come to section number 64. First let us discuss about income of spouse. Okay, so first point, if remuneration in cash or in kind is received from any concern in which the assessee has a substantial interest, okay, or even the relative of the assessee has a substantial interest, in such case the remuneration received by the spouse will be clubbed in the hands of the assessee. Okay, substantial interest na enna sir, 20% or more voting power in case of company, and in case of other than company 20% or more profit sharing ratio. Okay, and relatives yaru sir, spouse, brother, sister, lineal ascendant which includes the parents, and lineal descendant which includes children. Fine. So, for example, if I am having more than 20% share in a partnership firm and my wife is receiving salary from that partnership firm, in such case the salary received by my wife will be taxable in my hands. It will be clubbed in my hands. So salary யாருக்கு கிடைக்குது? பொண்டாட்டிக்கு கிடைக்குது. So salary is received by the wife. However, who will pay the tax, sir? The poor husband is going to pay the tax. Okay, wow. I told you the reasons in class also, because I am having the substantial interest. I can easily manipulate the money in that particular firm. So to avoid such practices, these clubbing provisions are in place. Okay. However, there is an exception. If my wife is receiving the salary and if she is having the professional or technical qualification for that job and she is receiving the salary appropriate for that job, in such case the income will not be clubbed in the hands of the transferor. Okay, wow. So if my wife is receiving the salary, if she is professionally or technically qualified, then income will not be clubbed. She will only pay the tax on the income. I will pay the tax on my own income. Okay, wow. So I hope you are clear with the provision. Now let us come to next point. Okay, one more point. If both husband and wife are having substantial interest in the same concern and if both are receiving the remuneration, then what will happen? In such case, before receiving the remuneration, see what is the total income of both husband and wife. Okay, wow. Then see whose income is greater. Okay, both the remuneration will be clubbed in the hands of the spouse whose income is greater. Okay, wow. So if me and my wife both are having more than 20% share in a partnership firm and if both are receiving the salary from that firm, in such case what will happen? If my income is higher, my wife's income is lower without counting the remuneration, then the entire remuneration will be taxable in my hands. Purida? Next. Asset transferred to spouse for inadequate consideration or without consideration. So if any asset is transferred without consideration or inadequate consideration to the spouse, then the income received from the asset will be taxable in the hands of the transferor. So if I transfer my asset to my spouse without consideration or for inadequate consideration, then the income from that asset will be clubbed in my hands. Similar provision we saw in house property, where if the house property is transferred from one spouse to the other for without consideration or inadequate consideration, then the income from then the transferor will become the deemed owner of the house property. This we studied in house property. Similar provision is there in clubbing also. Okay, wow. However, there is an exception. The exception is agreement to live apart. I told you that if any assets are transferred in an agreement to live apart, so for example me and my wife are getting separated and I am giving the property to my wife without or for inadequate consideration, okay, as alimony or otherwise, then this clubbing provision will not apply. Okay. Another point. I told you that the relation should subsist. The relation should subsist both while transfer and while receiving the income. Okay. So while making the transfer also both should be husband wife. While receiving the income also both should be husband wife. Only then this provision will apply or else it will not apply. So before marriage itself, if I transfer to my fiance who is my future wife, then will this apply? Answer is no, it will not apply. Okay, wow. Then I also told you that a wife went to income tax department and told that my husband is giving me the property and I am giving consideration as my love. Is love not a valid consideration? Then I told you the case went till Supreme Court and Supreme Court told that love is a valid consideration but love is not adequate consideration as per the provisions of this section. Fine. Next. If any income is earned by investing such income, that is income from income. So if I have transferred an asset to my wife and my wife is receiving the income from the asset, it will be clubbed in my hands. Correct? Now, that income that my wife receives, she is investing in a fixed deposit and she is receiving interest from the fixed deposit, which is income from income. She is getting an income, from that she is earning even more income. Will this income, that is income 2.0, income 2.0, will this be income be clubbed? Answer is no, income 2.0 will not be clubbed. Exam la income 2.0 எழுதிராதீங்க ஓகேவா. Next, if transferred asset is used in a business, then the proportionate income from such asset will be clubbed. Or if transferred asset is used as capital contribution, then proportionate interest on capital will be clubbed. However, for the proportion, you should take the first day of the previous year or the date of commencement of the business as the case may be. So if I transfer an asset to my wife and my wife is using that asset in her business, then the income from the business proportionate to that particular asset will be clubbed in my hands. Okay, wow. However, this proportion should be taken on the first day of the previous year, that is on 1st April, or if it's a new business, it should be taken on the first day of the business. Okay, so if business starts on 1st July and if I'm giving my wife gift of rupees 2 lakhs and she is putting it in the business on 1st July itself, then take the proportion from 1st July itself. Okay, next, transfer of assets for inadequate consideration to any person for the benefit of spouse. So for example, if I am transferring my asset to my brother and I am telling that the income from that asset will go to my wife, okay, in that case also the income that is received by my wife will be clubbed in my hands. Income is received by whom? By my wife, but tax is paid by whom? Tax is paid by me. Okay, so if transfer of asset for inadequate consideration to any person, any other person other than the spouse, and income is received by the spouse or any benefit is received by the spouse, then the income will be clubbed in the hands of transferor. Okay, now let's come to son's wife. Son's wife here is a daughter-in-law. Daughter-in-law. So similar to spouse. If any asset is transferred to son's wife for inadequate consideration, then the income earned from then the income from the asset is clubbed in the hands of the transferor. Okay, so if my parents, okay, are transferring any property to my wife, that is son's wife, then the income received from the property will be clubbed in the hands of my parents. It can be my father also, it can be my mother also. Okay, anyone if they transfer the property. However, if any income is received by investing such income, that is income 2.0, then such income will not be clubbed in the hands of transferor. And similarly here also, if the transferred asset is used in a business or transferred asset is a capital contribution, then proportionate income or proportionate interest on capital will be clubbed in the hands of the transferor. Okay, and here also, while making the transfer of the asset and as well as while receiving the income, in both the situation the relation should subsist. Okay, so that is while giving the property also son's wife relation should be there, and while receiving the income also son's wife relationship should be there. Next question, sir. Transfer of asset for inadequate consideration to any person for the benefit of son's wife. So if my mother transferred any asset to some other person, let's say A Limited, and the benefit is received by my wife, that is son's wife. In such case, the benefit received by son's wife will be clubbed in the hands of my mother if it is transferred for inadequate consideration. Adequate consideration na kelviye varadu, engiyum kelvi varadu. No question arises if the transfer is for adequate consideration. Only if there is without consideration or inadequate consideration, all these clubbing provisions will apply. Okay, now let's come to income of minor child. If minor child is earning an income, the income will be clubbed in the hands of the parent whose total income is higher. Okay, whose total income is higher. However, if the income starts getting clubbed in the hands of one parent, it will continue to get clubbed in the hands of the same parent for the subsequent years. Okay, however, if the assessing officer wants, okay, if he feels necessary, he will step in and he will change the clubbing provision. So once the income is clubbed in the hands of one parent, it will continue in the subsequent years. However, AO, that is assessing officer, can club in the hands of the other parent if he feels necessary to do so. Okay, wow. However, if parents' marriage subsist, this provision will apply. That is, both parents are living together, then this provision will apply. However, if parents' marriage is not subsisting, that is, both parents are living separately, then the income of the minor child will be clubbed in the hands of the parent who is maintaining the child. Okay, va? Who is maintaining the child? And I told you, child includes legally adopted child and also stepchild. Fine. Now, there is an exemption of rupees 1500 per child per annum for every child. Okay, so there is no limit of number of children. Fine. So if there are 3 children or 4 children, whatever, 1500 per annum per child is allowed as exemption. Okay, per child. But be careful. Don't take the exemption together. Calculate the exemption separately for each and every child to avoid silly mistake in the exam. Okay, fine. Now there are three exceptions. Okay, three exceptions. So there are three cases where the income of the minor child will not get clubbed in the income of the parents. The income tax will be paid by the minor child themselves. What are the three situations? Number one, manual work. If the minor child is doing manual work and getting the income from the manual work, then income will not be clubbed. Number two, income received because of the skill, talent, specialized knowledge or experience of the minor child. I gave you example of superstar singer. So if a child goes to superstar singer competition and because of their terrific singing talent, if they are receiving a cash prize, then that cash prize will be taxable in the hands of the minor child itself. Okay, it will not be clubbed in the hands of parent. And number three, child suffering from disability under section 80U. I told you that the child will get the benefit of deduction under 80U. Hence, if a child is suffering from disability under section 80U, then the income of such child will not be clubbed in the hands of the parent. So three exceptions: another manual work, skill, talent, specialized knowledge, experience, etc. And number three, child suffering from disability under section 80U. So in these three situations, if the income is earned, it will not get clubbed in the hands of the parent. The income tax will be paid by the children themselves. However, if an income is earned because of the special talent, and if such income is invested, and if income is earned on such investment, that is, income is received from income 2.0. If income 2.0 is there, even though it is because of the income from special talent, it will still be clubbed in the hands of parents. Okay, wow. So income 2.0 will be clubbed. So this was about the income of minor child. I hope you are clear. Now let's come to HUF, Hindu Undivided Family. So if a property is transferred to an HUF, okay, by an individual without consideration or for inadequate consideration, then the income received on such property will be clubbed in the hands of the transferor. Simple, correct. Now let's see the next provision. If an property is transferred by an assessee to a HUF and the HUF gets partitioned, and on the partition the property gets shared between all the members of the family. In such case, the income received from the partitioned property of the HUF of the assessee himself and the spouse, both will be taxed in the hands of the assessee. Okay. So for example, if I am having a property, I am giving the property without consideration to the HUF. Okay, then what is happening? HUF is getting partitioned. Okay, HUF getting separated, and me, my wife, and all the other family members are receiving the share of the property. In such case, the income from my share of the property as well as my wife's share of property, both will be taxed in my hands only. Okay, so if partition of property to the family, then income from the partitioned property to the individual himself and the spouse is included in the total income of the individual. I hope you are clear with the provision. Now let us come to the last concept, that is cross transfer. So if there are two transactions that are interconnected and seeming a part of the same transaction to avoid the taxes, then clubbing provision will apply. Okay, I told you that if I transfer my property to my wife, okay, the income will be clubbed in my hands, correct? So what will I do? I will transfer my property to my brother's wife. My brother will transfer property to my wife, okay, to avoid the clubbing provision and to save the taxes. Now, because of this cross transfer provision, even this cannot be done. I gave you an example, okay, from the study material question itself. So Vasudevan gave 6 lakhs as gift to brother's wife. Brother gives 5 lakh as gift to Vasudevan's wife, Mrs. Vasudevan. Both invested the money in a fixed deposit at 9% per annum. Okay, 30,000 interest was earned by Mrs. Vasudevan and 36,000 interest was earned by brother's wife. Okay, in such case, is it cross transfer? Answer is yes, this looks like cross transfer. Now the provisions are telling only the same amount can be cross transfer. Different amounts cannot be cross transfer, hence the lower amount will be considered as cross transfer. So see, Vasudevan gave 6 lakhs as gift, but brother gives only 5 lakh as gift. So which is the lower amount? It is 5 lakhs. So 5 lakh will be considered as cross transfer amount, and this balance 1 lakh, okay, balance rupees 1 lakh will be considered as genuine amount. It will be considered as a genuine amount. So the income on rupees 5 lakhs, that is the lower amount only, will be clubbed. Okay, fine. So 30,000, that is the income of 5 lakhs, will be clubbed in the hands of Mr. Vasudevan and Mr. Vasudevan's brother respectively. So 30,000 will be clubbed in both cases, which is the lower value. Fine. So this is the concept of cross transfer. I hope you are clear with the provisions of clubbing. Keep practicing the questions so that you are thorough with the concepts. Okay. Keep preparing. Take care. Bye bye.